Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, June 15th, 2012. And as we enter, and have entered halfway through the month of June, access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, it is up to you to take responsibility for your money and never enter trade unless you know exactly what you're going to do with that trade, no matter which way it goes. We do not influence the market. We are just trying to take advantage of moves in the market so that we might have our portfolios grow and have a decent rate of return. With that thought in mind, let's take a look at the economic announcements which have taken place during this past week. And as we can see, looking at the past week, really most of the things that came out really did not have much effect on the market this week. As we always look at jobless claims, let's go ahead and look at the jobless claims, and we see that they were just a slight disappointment for the week. Going into Friday, we do have consumer sentiment at 5 minutes to 10. That certainly can have an effect, and that's all we have left for the week that could influence the market, other than, of course, the typical news that we're hitting out of Europe, which at the moment don't seem to be moving the market all that much. The average true range of the market still is very high. We're up around 16, 17 points per day in the S&P. But as we look at these economic announcements, really did not get a lot of play out of those announcements this week, as the United States is kind of standing alone, and we're kind of sitting, waiting, wondering what's going to happen with Europe and how is Germany going to handle the European situation, and what's going to happen in the elections in some of the European countries. These are the things that are stalling the market out at its current level. So let's take a look at what that level has done during the past week and the effect on the S&P. As we look at a 3-month chart of the S&P, we see that we have entered our new trading range for the summer. Whether it's our final trading range or not, we don't know, but we see that it basically is from 1360 to about 1270, and more recently we see we've had some resistance at this 1330 level. As the week went by, looking at the first 4 days of the week, we see that as we enter the week, are entering into the end of the week, that we're basically have gone no place but sideways. Key thing that has occurred, look at what happened to our all-determining 30-day moving average. Has started to enter down into the midpoint of this trading range, which is what we can expect to have happen if the market takes on what we would call a sideways trend. We have not yet entered that sideways trend yet, as we're not spending time above the moving average and below the moving average. So far, we're just spending our time below the moving average. Notice all of this entire data is below that 30-day moving average. So as we see, we're still in a downtrend, but we're trying to set up support at this level so that we can go into this sideways trend for the summer. So at this point, things are setting up basically what we talked about in the last few weeks, and we're in option expiration week, which really has gone much of nowhere. And typically what we've talked about last Sunday was that during option expiration week in the month of June, more times than not, we end up with a negative week, and we'll see if that follows through with a negative Friday on options expiration week. Looking a little closer at the SPX, we see that there's our last 4 days. We started last Friday. We were right at this level right here, and you see on Thursday morning, which was yesterday morning, we're at about that same level. So a little bit positive for the week, but certainly nothing to talk about. 30-day moving average has been acting as resistance, and we'll see what happens on this Friday, which also, if we look back at the last about 30 years, we find that it's kind of a toss-out whether this will be a positive day or negative day, but no great moves out of the market this week. Reminder of what we talked about last Sunday, Monday, is that we had expectations that next week many more times than not has been a negative week in the market after the June expiration week. So we'll see if that follows through and if some of those averages actually take place. So with that, let's take a look next at the Dow, see what it looks like. Notice we've got a sideways trend in the S&P. Okay, let's look at the Dow. Looking at the Dow, we see that the Dow actually has been a little bit stronger than the S&P, as we see it a slight bit higher on the 30-day moving average in the S&P. Could be time for a bit of a little breakout, so it looks, if one were just to look at the Dow and forget about what we see out of our past history. Now notice that the volume has been typically about average for summer months. Dow showing no great moves or surges as far as volume, giving us any big tip-offs. So no great volume surge yesterday, as the market and the Dow did have a nice strong Thursday. All right, next let's take a look at the NASDAQ. We see the NASDAQ. It really looks a little bit weaker than the Dow and the S&P, as it's hanging back well below the 30-day moving average. The 30-day moving average heading in, certainly showing us a trading range for the summer so far right at this level, and the NASDAQ definitely not leading the market up at this point. We'll need a move out of the NASDAQ in the coming days in order for us to really see any big meaningful move in the other averages. All right, and talking about the SPX when I say that. Let's take a look at the Russell 2000, seeing that that's actually the weakest of all the averages. However, it is the most up for the no, the NASDAQ is, I'm sorry. The Russell has actually been a bit of a lagger, as we see the 30-day moving average coming down. We're in definitely sideways trend, but a lower sideways trend, as we've been spending time below that 200-day moving average. Currently, kind of honing in on that 200-day moving average, acting as some kind of neutral position for the Russell at this particular point. All right, next let's take a look at the VIX, and as we look at the VIX, we see that as the market had a bit of a bounce on Thursday, notice how the VIX pulled back. We're still well above our normal trading range, over 20, but we see that it's a huge pullback in volatility yesterday, as some of the fear seems to have come out of the market. With that, let's take a look at some of our ETFs to see what some of the other sectors in the market are doing, as we see the sideways trend take place this last week in June options expiration week. Looking at the bonds, we see that they also went sideways. No big move one way or the other. Many times there's an inverse relationship between the bond market and the stock market. Kind of interesting. Who would have thought that if we look at the last 10 years, we probably see a bigger move out of bonds than we do out of the stock market. Not the way we were traditionally taught in Econ 101. Next, we'll take a look at the ETF for the financials, and that's the XLF. And remember, the market seldom goes up without the financials coming with it. And we see that the financials are sitting up against resistance, up against that 30-day moving average. So we're at kind of a crucial point. Are we going to break up and confirm that this sideways trend is taking place by coming up here, testing some of these higher levels, and then coming back down here to our support levels for our summer trading zone? It's kind of what I expect. I expect this to be our trading zone for the summer. Could go a little bit higher here. That's certainly possible. And define where our trading range is going to be for the summer. But at the moment, we're not showing any great strength, no leadership taking place, sitting at that 30-day moving, which will act as resistance until it proves otherwise. So the XLF for the week really hasn't done all that much. Basically ended up about where it started, just like the overall market. Next, we'll take a look at oil and see what oil has done, as it actually has certainly had quite a downtrend during the last month of May and the first half of June. And we see that as we've come into June, this is kind of leveled off, and we're certainly within a trading range here, headed sideways. as we're in a market that is just seems to be kind of lagging along. USO is the ETF that we look at for oil, and during this particular week, it did basically nothing. Ended about the same spot that it started during the options expiration week. Next, we're going to take a look at gold, and we see that gold during this particular time had a bit of a pop up from the lower level that it was trading at as it headed down week after week. And we see that now we're trading sideways again. Gold has popped this week and certainly is higher at the end of the week than it started at the beginning of the week. And it actually had a nice little move in gold. That flight to safety or whatever it is that actually takes place in the gold market. Sometimes it's a little hard to figure out. But gold had a good week as it's heading up, and we're basically sitting a little bit above that normal trading zone, and we may have to change this trading zone for gold. Have no expectations at this point whether it's going to go up into the old trading range or whether it's going to come back and work its way down here. So far, confirmation. Yesterday we had a outside day on Thursday. In other words, we had a lower low and we had a higher high. And it's certainly the bulls were in control yesterday as gold ended up near its high of the day with a good strong week. Next, we're going to take a look at the Spider, our ETF for the S&P 500. And what we're looking for is what kind of volume surge did we have yesterday? Did we have one? And we see that yesterday, as we ended up with a nice bullish day, we did end up with a bit higher volume than we had during the rest of the week, as we saw a surge into the closing of the SPX options, which took place Thursday and then settle on the Friday openings. So a bit of a strong day yesterday. Again, if we look back, where did we go for the week? No place. Had a big gap up on Monday, and it basically sold off. And then we spent the rest of the week getting it all back. There's our close on last Friday. There's our close on Thursday. And when it's all said and done, what have we done? Burnt up a lot of time. And for those of you that are sellers in the market, this certainly works in your best interest as we watch the market move. And we saw that yesterday it did have some volume as it had a nice bullish day. All right, for those of you that are gold members, we're going to continue on with our stocks to watch. We're going to look at these charts and see what they did as the market went sideways this week. For the rest of you, thanks for being here. And if you'd like to see other free videos, you can go to www.optionsuniversity.com/free gold. For our gold members, if you'll just hang on in a minute, we'll continue on with our stocks to watch. This is Butch Shorak, Options University, Friday, June 15th, 2012. The heat of summer is here, but the market went sideways. A little tepid is all we can say. Thank you.